The condo market is facing a significant slowdown. This is exactly what I'll be reacting to on this week's reaction video about some of the latest numbers on Precon, rental, and resale condo space in this video. Now, if you're looking for some help on how to navigate this real estate market, and you want to just chat about what you're planning to do, maybe even specific about these condo numbers as you watch them after, because yes, they may affect you if you're trying to buy or sell in the Toronto condo space right now, then you can book a call with me to talk about your unique situation using the link that's right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and if you're enjoying the content I'm putting out there, do me a solid and like and subscribe. Now, we'll be reacting to this video talking about the pre-con space, the resale space, and the rental for specifically in the condo area in the GTA. But without further ado, let's get started.
Sean, we are at the start of 2024. We've been hearing of some momentum at the end of last year in the housing market. But maybe let's just talk about Canada's condo market, the rental market.
So I'm going to pause here just because there is momentum in the housing market, and she's very specific on this. We're seeing a lot of momentum in the freehold space. We're seeing some momentum in the condo space, but significantly lower than the freehold space.
What did Q4 2023 look like?
Yeah, in the rental market within the GTA, we saw market conditions transition towards somewhat of a more moderate environment. We began the year with annual rent growth rising at a double-digit pace. As we looked at the fourth quarter,
the double-digit pace for rent growth has been normal since like 2017.
Numbers, we saw that condominium rents in the GTA were up by about 4.5% on a year-over-year basis. So a much slower rate of rent growth than what the market has been used to over the last couple of years. And that's really due to a few factors. One, I think it's a response to a big surge in rents that happened between the first quarter and the third quarter that really eroded rental affordability. It brought average rent.
That's also very seasonal. Like usually Q3, Q4 around like summertime is when rental rates spike up the most.
Rents in the GTA up to about $3,000 a month. At the same time, we had a surge in international students arriving into the region. And then from there, as the market kind of transitioned towards its slower seasonal period during the fourth quarter, we saw rents dip quarter over quarter. And then we saw the annual rate of growth transition towards its more historical average of around 4.5%.
Tell us what you've been seeing in the condo market when it comes to sales, when it comes to construction starts. What does that picture look like?
So condo sales in the GTA for new construction, pre-construction units in 2023 fell 41% from 2022.
41% drop in sales is very significant. And what this basically means is that a lot of the investors are out of the market, right? And I can already tell you, even if I'm talking to my clients, you have to remember, a lot of the pre-construction sales come from investors because if you're an end user, you're not really trying to buy a property in the pre-con space unless you're one, willing to pay a premium, two, you kind of know exactly where you're going to be in like 5 to 7 years, which most of the time, even though you think you do, most of the time it doesn't work out that way. And the only end users that are looking for the pre-con space right now is probably people downsizing who don't have a timeline and they want a very specific type of layout, a floor plan, or like some kind of terrace, right? So that's why without a lot of the investors, not many people are buying pre-cons.
We had less than 13,000 sales last year. It was the lowest total since 2008 at the onset of the global financial crisis. And it's well below the long-term trend level of about 25,000 sales a year. So it was a substantial slowdown. Pre-construction buyers were mainly on the sidelines. As a result, we saw higher levels of unsold inventory, mainly within pre-construction projects.
There's actually a lot of remaining inventory in the pre-con space right now. And if you are looking for pre-con, this is when you can actually like negotiate things and move things around, kind of similar to the resale market like a few months ago on the freehold side.
And as that's happened, construction starts have slowed down considerably. We actually saw in the second half of last year a 72% year-over-year plunge in construction starts for condos.
So the 72% construction plunge, meaning like they're breaking down to building condos, that's not going to come and bite us in the butt until probably like 5-7 years down the road. So this is like a 2030 problem for Toronto real estate. Because right now, the completions we're getting, which I think we have quite a high amount from 2023, and we're scheduled to have a lot from 2024, is from the 2017-2018 pre-construction boom, right? So a lot of these investors would have bought like 7 years ago, and they're still in the black because like they bought it for like $800-900 a foot in the downtown space, even though they let it go right now. So when we say that we have a 71% kind of plunge in construction, yes, it's a very, very bad thing, but this is a future us problem, not a current us problem.
And we're expecting that slowdown is going to continue into 2024, given the fact that new construction condo sales have been so slow over the last couple of years. And in order for developers to start construction on new projects, they need to sell at least 70 to 80% of those units. And that's just not happening.
Exactly. They're not selling all the units. So they can't go to the bank to get construction financing unless you're like one of the few developers who have an exception to that and they're like really well funded. So that's why even though there may be less sales, there's a lot less construction because maybe some of those sales haven't amounted to that threshold in which it allows you to start building. And that's the challenge we have right now in the condo space, pre-construction wise anyways.
Right now. So construction activity is going to fall. At the same time, we're actually going to see higher levels of completions because of all the units that are under construction right now. And we're actually projecting that by the end of 2024, we're going to have 20,000 fewer units under construction compared to the peak in the end of 2020.
Which tells me that we're going to get a lot of completions this year based on those numbers, if that we're going to have a drop off in construction.
Too. So we're in for a pretty significant slowdown in condo construction over the next year.
And what are you attributing that slowdown to? I mean, we're obviously operating in this, high inflationary environment, higher interest rate environment. What does the labor picture look like on the construction side? And I'm also going to throw in, what do the regulatory obstacles look like, if you could weave all of that in?
Yeah, certainly in terms of pre-construction sales, the slowdown is mainly attributed to interest rates. Interest rates at a 22-year high. Condo affordability has eroded significantly. So, even with some deflation in condo prices over the last couple of years, the average mortgage payment associated with buying the average price unit is up 20%. So it has seen a big deterioration in affordability. At the same time, developers are dealing with still near record high construction costs, soaring development charges, high taxation, and it doesn't give them a lot of room to lower new condo prices to help to.
Exactly. So this is what I've always been saying. You can't rebuild a condo because construction costs are high, material costs are high, and taxes are high. The only thing that's probably seen a little bit of deflationary right now is the piece of land, right? So of the four things I just listed, only one of them, this one, the land piece, may be able to come down in price. But if your other three aren't coming down, it's very hard to see the overall product cost come down.
Spur more demand and more sales and by extension construction activity. So we're stuck in this difficult situation where demand has slowed down because of high interest rates. Developers are kind of stuck because they're dealing with record high costs, and as you mentioned, there's only a kind of a fixed amount of labor supply right now, and it's taking longer and longer for projects to move through the system, and it's really starting to choke supply. And we're going to see that come to fruition in the next few years, given that there is a lag between pre-construction sales, construction starts, and then final completions. In a few years from now, we're going to be dealing with a very significant slowdown in new deliveries. At the same time, obviously, this is going to happen as the government continues to target record levels of new immigration. So the mismatch between demand and supply fundamentally in the market is unfortunately only going to get worse.
Let's talk about that lag effect from a purchase to completion. I know that you had mentioned a few years and how that might affect supply. What is the expectation then for this year, and as you see that horizon?
Yeah, I think the supply that's going to be entering the market over the next couple of years is going to look much different than the quantities of supply that are going to be entering the market in 4 to 5 years' time. We had just over 21,000 condo completions in 2023. It was one of the highest levels that we've ever seen. That was also one of the reasons why we started to see rent growth slow down. We just saw a lot of condo.
Again, these are the stuff that was sold in 2017, 2018. Keep in mind, we had another boom in like 2021 for Precon. So we're not going to see this kind of like, call it lack of supply, again, like I was saying earlier, until 2030 or so. So we may see another boom in supply in like maybe 2028 for condos because of the pandemic Precon sales.
Those listed for rent. We also saw a multi-decade high for purpose-built rental completions last year. So there was a pretty good increase in supply in 2023. Obviously, demand outpaced that supply, which is why you saw rents continue to increase.
But not to what most people are accustomed to. So if people are accustomed to 10% rent growth and they're putting down their performa when they're buying pre-construction, I think this is going to put a hamper in kind of those performas.
But as we move through 2024, I think a lot of the factors that were impacting rents are still going to be there, but probably to a more muted degree. We're probably going to see home sales begin to increase. They were at 20-year lows in the GTA last year, with expected at least slight reductions in interest rates. We should see affordability improve at least somewhat, and that will move some first-time buyers into the marketplace and alleviate.
I think most of the condo buyers right now are first-time home buyers. I don't see many people kind of going after condos as an investment right now because the numbers, like from a cash flow perspective, don't make sense. And if you are going to be buying Precon, you're basically hoping that you have super long interest, you're getting paid on the interest, and that project isn't going to be built for like 7 to 8 years when you see this supply shock in, like, call it 2030. But if you're buying anything in Precon that's going to complete in 3-4 years, I would, double check your thesis.
Some of the pressures on the rental market. As well, we'll probably see a higher level of unemployment, so some slack opening up in the labor market. And that should, at least to some degree, lessen the amount of rental demand going into the market. And at the same time, we'll see, as I mentioned, at least a temporary increase in supply coming from condo completions that are expected to rise to at least 25,000 units this year.
If it is 25,000 in 2024, and again, they always say this number because there's always delays, that's going to be more than last year.
And as well, we'll still continue to see a decent amount of purpose-built rental completions. That supply decrease is going to be lagged by a few years. And in that regard, we'll see rents, I think, continue to trend pretty close to the rate of growth that we saw in the fourth quarter of last year. So kind of in the 4 to 5% range. Condo prices, I think, will start to pick up just with the reduction in interest rates. You'll see at least some improvement in condo sales and at least an uptick in condo prices. But I'm not expecting a huge turnaround in the market for condo sales.
I agree. I talked about this a lot. I think, again, we're going to get a little bit of condo bump back, but nowhere close to what we're seeing in the freehold space.
In 2024, I think there's still going to be a lot of uncertainty around interest rates and obviously some uncertainty and hesitation regarding the economic outlook.
Yeah, as you can see, based on these numbers, like obviously we're bouncing back from last year of how condos are going to do. And that's mainly because, again, everything was really, really bad last year. We're historic lows for everything. Like that bounce back, like I've been saying for the last few videos, is going to be dwarfed compared to how the freeholds are bouncing back right now, because we're still getting a lot of inventory that's going to be completing in 2024, like you said. And we also still have that next kind of like surge of inventory for the condo space that's coming from the 2021 sales in the Precon side. I think the condo space, while it will be trending up, it'll be a lot more inventory than relative to the freehold space in Toronto. And that's kind of why I've been saying the Toronto freehold space is going to outperform the condo space this year. And it's not to say that condos are a bad purchase right now, especially if you're a first-time home buyer. It's actually a great purchase if you're a first-time home buyer because there's so many choices right now. Because most first-time home buyers don't jump right into the freehold space. You kind of work your way up the real estate ladder, right? You go condo, maybe 2-bedroom, right? Then maybe the semi, right? So for a lot of people who are trying to get in the real estate market space, yes, the condo is a good opportunity right now. But as an investor, unless you have like a different use for it, kind of like, oh, hey, your kids are going to school or you want to live there for 4 years when you're in school, then buying just for the kind of appreciation and the cash flow may not make sense if you're not a long-term investor, right? Meaning like call it 5-10 years out. Anyways, I hope this gives you an idea of what's happening in the real estate market. And if you do want to chat about your personal situation and whether you should be making a move in 2024, you can book a call with me using the link that's on the screen. It's right here, www.chatwithzen.com. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one or this one? You know what? Just watch them both.